Welcome to the midweek stock market update. Right now, let's get into some amazing stocks and returns that we've been seeing and a benchmark. So the midweek stock market update on Wednesdays is a new thing I'm doing. And these are the valuations. I'm not going to delve into all the things that I do in the full update on Fridays, but these are price earnings ratios. You can see cheap is energy, cheaper banks. And I asked AI, given quantitative tightening, which is what's happening now since the debt ceiling resolution, where liquidity has been removed by the central bank in America from the markets, which sectors might do well? And it said energy and banks. It was a bit of macroeconomics, which I didn't want to spend my time thinking about. So I just asked AI. These are performances over the past week. You can see everything's gone green again. Bit of a relief from what happened with the debt ceiling. However, there's a worry, this quantitative tightening thing. Okay, that's a bit of an overhang. These are price earnings growth ratios. Red is bad, green is good. It's a measure of valuation, share price compared to the rate at which profits are growing. So there is still some worry. Let's have a look at how things are going so far this year before we look at what's in my portfolio and what looks particularly attractive. Before we do that, don't forget alpeshpatel.com/links and to subscribe and all those other wonderful things you people know to do. So the Nasdaq's up 33% year to date. Now, you will know if you, in 1999, most of you weren't born, read my Financial Times column, that my very first column said in its very first sentence, I'm selling all my UK stocks in order to buy US ones. And not only was that vindicated this year, but actually since 1999. Look at how the Nasdaq's done since 1999 and look at how the UK markets have done. So anyway, this year, Nasdaq's up 33%. So my SIP, ISA, pension pot are doing pretty well. And the S&P 500 is up only 11%. UK markets are up just 6%. So you can see, imagine two Alpeshes. The one who has done what I've done, sliding doors kind of thing. He's up 33% on his pension. And the other one, who's his British cousin, is up 6% in his pension. Who do you think is doing better? Simple maths. Don't answer that. Okay, S&P 500. So where we are on it. Now, it's a midweek update, so it's going to be slightly different. We're escape velocity past this upward trend that began down there within this downward trend. So the bull market began in the middle of the bear market, and this is where we are at the moment. You could get a pullback. You should get a pullback of some profit taking. However, longer term, I'm very happy with this. Would I buy 2 times leverage S&P 500 right now? I would if I'm going to watch it every week and look at my midweek updates and my week end updates on Fridays, then I'd do 2 times leverage on either ETFs, spread bets, or CFDs. But other than that, I wouldn't just buy it blindly right now because you might get a better timing. But if you're risk loving and we're holding it for a year, then fine. 2 times leveraged might be okay, but there's a volatility risk with all of that. The monthly MACD flat to rising, that's all going up nicely as well. The monthly stochastic going up nicely, all very good and attractive. Okay, FTSE 100 selling off. You can see, and I said it'll have some kind of bear market ramifications over there. When you get the MACD touching its signal line from above like there, you get a bit of a boost up, but it's a false breakout and then it'll fall again. And that's what will happen. Would I buy puts on the FTSE 100? Yes. Apple, nice upward trend, all fine. Bit of profit taking likely to go on. Would I buy 2 times leverage today? Right today? No, I'd keep an eye on it. Let's see what happens on Friday, whether I do 2 leverage on that. Okay, and that's what the analysts say. High 210. So I'm going to show you some of these charts, and this is what the analyst predictions are. The average is 182. The blue means the current price, high means the highest, and return potential means what would happen if it hit that average. Okay, it's the same for all of them, so I'm not going to repeat myself. Midweek, I want to keep it shorter and snappier. V-shaped recovery. We bought this in January, as you know. Last year, we had to sell out of it in January, February, March, because actually the falls were sharper than we thought. We thought we'd buy back into it, but we didn't until January of this year, and that's been a great return for the pension. That's my job, to look for these kinds of things. I'd say about 40%, no, 50% of my portfolio is in the stocks I'm about to show you on this broadcast. So MACD flat to rising, all looking good. That, look, print that out, put it on your wall as a poster. That's what you want. You want that kind of setup. Now, we got into that in January. Watch my broadcasts on Telegram, YouTube, and all the rest of it, and you'll know that. You can find them from those links on the screen. But by now, it really gives it a hard confirmation. Okay, that's what the analysts say. Look at that in your own time. Microsoft upward channel. Would it get a pullback? Yeah. Would I buy 2 times leverage today? If I'm watching it, on a daily basis, then fine, just really trading it. And I've got a webinar on trading tonight. Would I just buy it for the next 6 months? Well, the problem is it could pull back in the short term, and therefore I'll have a bit of an issue. And I don't think it's going to have that upside as well. Sorry, I've just got to do a message. Okay, so we've got that upside on there. That's the average. That's the high up there on Microsoft. And you can see what the figures are. Amazon, V-shaped reaction. Okay, fall and then V-shape. You've got the MACD dotted line over there and looks ideal. All right, absolutely looks ideal. Disney, flat base over there, dotted line MACD. All looking attractive. Why is it not going up higher? Well, all these banks think it should, so I'm fine with that at the moment. Okay, and you can see the figures. Nvidia, would I buy more now? If I was risk loving, I'd double down. I'm not that risk loving. I think it's starting to look a bit overbought. Would it be okay for the long term? Yeah, we're going to keep a weekly eye on it. You can see it's fallen off a little bit there. There'll be some profit taking. It can't sustain that angle of inclination because that would mean it's going to just skyrocketing. No company does that. This is more normal for it. So what I'd say with this one is if you're risk averse, you get a piece of paper. You say, if it drops X%, e.g. 10%, how much will I sell? Maybe 10% if it drops 10%, and so on, until you find the right numbers for you. If I had a crystal ball, I could tell you what that number should be. Okay, so you might have made a lot of money, like as we've done since January, and say, well, if it drops 25%, I'll sell all of it. Or if it drops 15%, I'll sell half, and so on. Find your own risk appetite. Short of a crystal ball, that's what you've got to do. That's where we are with Nvidia. That's Tesla. Okay, you see it going upwards, nice upward trend, flat to rising on the MACD, and it's rising upward there nicely. Fine, what more do you want me to add? Okay, and it's an AI play as well. You can see what the analysts are saying. Meta, V-shape. I've said everything there is to say on this. Thank you very much, Meta. Again, one of those we had to sell out of last year. It's one of my 5 quality companies, Apple, Amazon, Microsoft, Alphabet, and Meta. And we had to buy back into in January. We got in a bit late, but we can't bottom fish because we don't have a crystal ball. So great for the pension, great for my son's pension. Chipotle, flat trend line up there. It's an AI play as well, and it's rising nicely. I'm happy to hold on to it. That's what the analysts think. ServiceNow, another one, lovely. Thank you very much. Gorgeous since January. And as I said, have a look at my Telegram, YouTube channel if you want the weekly and now mid-weekly updates, and that's what the analysts say. Have a look at the campaignforamillion.com. Have a look at our software. Have a look at all the services we provide. We give a whole load of free stuff, and I'd say 90% of the stuff that's free, 90% of the stuff is free because 10% of the people will pay for some of the other services, and it's great. So have a look at all of that on alpeshpatel.com/links. Thank you all very much.